What's up, guys? What a bloody week that was. Holy shit, markets just closed and there's a lot to talk about. So let's get into it. Welcome to the show. My name is Caleb. I'm a retired engineer and I make videos on the internet now. And so I mostly talk about Tesla and Bitcoin, and that's about it. But yeah, welcome to the show. So there's kind of some inverse action happening today. If you're a Tesla shareholders, which if you see all my video history, you know I aspire to be as much as possible, then you're in this like long dip in Tesla. The dip keeps dipping. How many dips is the double dip gonna dip? It's a lot of dip a lot of layers to the dip. But that's because there's a lot of layers to the market, and there is definitely a lot of manipulation happening right now. And all of this negative FUD and fear, uncertainty, and doubt about Tesla is outrageous. And it's a little bit hilarious. And you guys are talking about, once again, how they're a car company, which is like the same as just saying that Apple is a phone company. I guess, yeah, I can't say they're not a phone company. They make a lot of phones. You know, that isn't how I would categorize or think of or put a conceptual framework around Tesla. And so, yeah, like the dip is dipping. Meanwhile, SPY is unstoppable. It's unstoppable. It's like another bullish close. And so we had basically this sell-off on Thursday from 223-ish, something like that, to 523 to 513, I think it was. It was exactly 2%. So like, what is everybody talking about? Where's the 2% pullback? The SPY hasn't had a 2% pullback in so long, blah, blah, blah. Well, here it is. So we checked that box, which is a nice one. At the same time, we closed with a bullish level. That 518 is a key level. I won't reveal what all my sources are, but I like basically if you look at the dark pools, that has to me become a pretty reliable indicator of what the market sentiment is. And it's not like it's, you know, a fortune, a magic crystal or whatever. Well, a little bit it is, because it can help gauge sentiment. Basically, you can just see if people are testing the water, right? Or like we saw a lot of hedging short term in the VIX, but then the midterm didn't really spike as much. So anyway, there's all these different signals. There's about 75 meaningful signals out there. I have access to and understand about 3 of them. So we got a ways to go. But from what I've gathered, we are in a bullish market totally still. And this close is still bullish. And what I think is going to happen is 2 things are happening. One, you have everyone, including Elon Musk, trying to shake out as many I don't know, pussy shareholders. I'm sorry, I couldn't think of another thing. I tried to be woke. I did try. I couldn't think of another thing. Out of the stock as much as they possibly can. They're going to margin call them. You know, you can get a couple of margin calls here and there, get a couple of shares called away. Nobody likes that. Basically, we want to increase our ownership as much as possible. If you did get margin called today, as I did, I'm with you. It's a painful process. I've been through it a million times. It's usually kind of a good thing just to like reduce the position size, because if you're getting margin called, obviously your cost average is off, right? And so it's not like the worst thing in the world, but it can be, and it has been for me. So anyway, like there's all these tricks of the trade when using margin, and everyone and their mother wants about as much Tesla as they possibly can. So of course everyone would want to buy it on margin. So therefore it's really bad for margins. Now, one day that will change and it'll be a 50-25 margin ratios. But today it's something like 54-50 or whatever. It's really high. And so you'll definitely get called if you try to stack up Tesla on margin and you're wrong about the price. And so, but there's a lot of ways to still accumulate on Tesla during this dip. If you've been watching my previous videos, you might remember me saying, since I know I have so many avid listeners who are paying close attention through every video, that I did say that I think we are going to be in a rough time for Tesla because there's not really going to be any good news. And in fact, there's been confusing news, and it's not like Elon Musk is going to go out of his way to make the stock price go higher. It's kind of like the opposite of what he does. And so they including Elon Musk, want the price. They want all of the traders basically to get nuked. And it's kind of like giving discounts, right? He sees it as giving discounts, and that's how we should receive it, as getting discounts. But it's unless you're getting liquidated, right? And so anyway, that is kind of brings me to the thing I was talking about in a previous video. Basically, I won't spend too much time on this, but my play on it is to wait out Tesla for either self-driving, which I think is imminent, or the $25,000 vehicle, which I also think is imminent. I actually think they're both going to basically happen at the same time. And so while I'm waiting for that to be confirmed, I'm just accumulating dividends, basically. So I get about 30 to 60% of the upside of the stock, and I get a lot of the money back as dividends. I do that through TSLA, and that basically lets me buy as much of the Tesla dip as I want and never have to worry about margins, because it's not only providing cash flow, but the key thing is that the actual margin requirements are 25%, so I can borrow against those shares and they're not going to count against me. So that's a good thing. So that's how I'm playing it. But yeah, it's just funny to me. It's funny that Tesla is at all-time lows and the market is so bullish. So basically what I think is going to happen, and I'm just reiterating what I previously said, is that we are headed for this blow off top where like everything is going to rally at once. And I think that maybe not, that might not be imminent. Maybe it's hard to say. I mean, it could be imminent. Because it seems like we have to have a real retracement, like SPY below 500, right? Unless we're breaking into new all-time high territories, which we could be for several reasons. One, the AI evolution. Where's my thumb? The AI evolution is real. It's real. The AI evolution. Two, we have. Why am I doing? I'm distracting myself. Like I have a camera up here, and so anyway, there are two. Is the Federal Reserve is going to lower interest rates, and then three, there's been cash accumulating on the sidelines forever. So that's like a triple catalyst for the market, which I think is already happening. I think that it's already being, all that's already being priced in right now. But it could lead to like maybe 500 doesn't get broken until Xi Jinping makes a try for Taiwan or whatever, you know. But that's what they want. They want the people that are selling Tesla, because you don't have to own Tesla to sell it. It's part of like how we do markets in America. I haven't been able to take advantage of being a short seller, but one day I would like to. It basically ensures that whoever has the most money will always win. But so that's like why it's nice to have the most money. Maybe is one way to look at it. I don't know. But even if that's like not entirely accurate, it basically is accurate, because when you do sell short, what happens is you actually get a credit. So then what do you do with that credit? It makes it so you can actually double down on selling short again and again and again and again. And so like these people with either very low cost bases or whatever's, even just speculators, they can just trend follow, and the trend is like so strong right now, um, on just a few stocks, and uh, yeah, yeah, the trend is very strong, but not for Tesla. So it's just funny that it's like the total opposite. The S&P is like making all-time highs basically. It's holding at every key level. It's honestly, it's like magic to watch. I don't know how long it's going to last, but I did know that if we closed above 518, that was like a really bullish thing, and that happened. And so who knows, maybe next week it'll be bearish. I don't know. Um it that it goes back to like, what is the real macro environment? Well, I think the macro environment is like, what is the truth of reality? Everyone's going to say bullshit about Tesla. They're going to spread their FUD. They're going to say that they're not a car company or whatever. Anyway, why is it even bad to be a car company? Like, isn't Toyota worth like 200 billion? You know, like what the fuck? And so they're yeah, like they're spreading FUD, but if you actually look at what the macro is, it's so bullish, it's crazy, because all of the money that's been accumulating interest, that's basically been getting paid to wait, which is probably was the smart thing to do with your money 3 years ago, but it's not anymore, but it probably was, or whenever they started raising interest rates. All that money is about to get their yields chopped and chopped and chopped. And the catalyst, the definitive state change, like the climate change event where things are just different, is when the Federal Reserve, there's like 10, but like a bunch of them have already happened. One is like when they say that they're really going to cut rates, that already happened. 2 is when they announce the first rate cut. And then 3 is when that cut literally is enforced, which might be on the same day. Who knows? It could be on the same day, probably not. But because why would you waste one of the steps? And so I think that on each one of those, the money and that's accumulating high yields is going to get punished. And as those yields go down, you're going to look at all of these equities, and they're going to be trying to find areas of the market that are undervalued, which I think is like definitely EVs and genomics. I mean, at the end of the day, like, you know, I'm not like super duper into Rivian, but like it is backed by Jeff Bezos, and they make a lot of vehicles. I see them on the road, and Amazon has like infinite demand. So it wouldn't be right for Elon Musk to just like take the space basically. And so I think Rivian is actually a worthy competitor. Lucid, sorry, I don't know. Maybe you'll make it. Like, the problem with Lucid's model is this backwards, actually. I thought that the CEO was kind of like taking an interesting approach, but problem is the whole efficiency is actually in mass production, which is like the opposite of luxury. So like you're basically trying to do what Elon Musk did 10 years ago. Like he already did that. Now you got to do the next thing. You can't like redo his gag from 10 years ago. On to the next gag. And so the next trick, right? So what do we got? This macro environment that things are actually very bullish. So yeah, the money I think is going to be coming off the sidelines as interest rates go down. That yield is going to go down, and they're going to be looking for all these undervalued places. Rivian, Tesla, I think are getting close to like below intrinsic value. I think Tesla below like 120. I don't know how do you value that? They made $25 billion last quarter, and it's like the worst quarter they're ever going to have in their company's history. And like their worst quarter they're ever going to have was $25 billion of revenue or whatever net. Anyway, I don't know. I don't have the number exactly, but it was like billions upon billions upon billions of dollars. So anyway, their whole thing, the reason I say it's funny to say that they're a car company is like saying like Apple is a VR headset company. I think Tesla is going to make way more robots than cars. I mean, way more humanoid robots than cars. I bet it's like 25 to 1, 25 to 1, something like that. Like, how many cars do you need? You need infinity of humanoid robots. You need infinity of them. Like, how much iron is in the earth? You know, that's how many Tesla robots we need. Because as soon as one can build another, that's it. That's the end of it. I mean, that's probably 25, maybe not even that much years away. Depends on how much of an accelerant AI actually is, which, considering how we're using it to make better and better AI, I think is probably pretty recursively, acceleratingly, potently a force of change, of positive momentum in every field that it impacts, which is everything, but which it intersects with. In particular, I think robotics is one of them. I mean, AI and robots, that's like peanut butter and ice cream or whatever. I don't know, like what would be good together. It's like chips and salsa. Well, I'm hungry. I'm hungry right now. And so that would be good though. Both those things would be good. Anyway, so yeah, like the macro is so bullish, and we got the money coming off the sidelines, going into the equities. It's going to be looking for a place to go. I mean, I cannot believe the discounts that we're getting on Tesla. Basically, you could have bought Tesla 3 years ago for like $100 more, held that whole time and lost. So like every shareholder who bought Tesla 3 years ago basically is getting hosed. They're getting mega hosed. And so like really, you really do have to like accumulate as much as you can at these levels. And like I said, I'm accumulating through Tesla and a few of, obviously I have a couple of calls, you know, just a few 100,000. No, I'm just kidding. I would like that. That would be amazing. Could you imagine getting your hand on like 25 in the money calls on Tesla? Could happen. Could happen. If the price gets like so low, these chips are going to be selling for just like a quarter. And like, imagine Tesla at 100. So like, if you're playing it my way on margin, you've been getting paid that whole time, right? You're just getting more dividends. You're increasing your dividend pool. And because, as I talked about previously, the idea with this yield max fund is that the dividends are going to increase with the underlying stock price. So as right now, the dividends are like, you know, whatever, 70 cents a share, 90 cents a share, something like that. If Tesla 10X's, those dividends could be dollars, like, I don't know, $10 a share. Maybe not, maybe like $5. You know, it's definitely going to be a lot more. And so the idea is stack up as much of that yield max as I possibly can, because it's good for margins, so I can buy or dip and just, you know, try to be strategic on the yield from the dividends to rebuy the dip. But like, that's part of it, that, you know, like, you're actually, the price, some of the dividend is coming out of the stock price, so you have to buy back in, otherwise you just got diluted. That's how that works. But the idea is you get a big pool of it, and then boom, you get a couple of months in a row where it's like boom, 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 boom. You're getting like triple dividend payouts or whatever is the idea of it. But like, the nice thing about it is it gives you upside exposure to Tesla without a margin, with shares that you can borrow against. They're not just marginable, like, they're good for margins. So that is the most important part of Tesla. And then, yeah, you go long on the shares and you buy the dips and sell the rips and get a really good cost average. but try to get as many in the money calls expiring in 2026 as you possibly can. Because if Tesla did fall like another $60 from here, let's say it fell to about $100, you could buy calls that expire in 2026 that would cost like, I don't know, 25 cents a call with a strike price of 290, 350, I don't know, 300, 350, something like that. Like probably closer to 500. But you could actually be accumulating a real strike price that would actually hit for pennies. And then like that would be so crazy. Anyway, we'll see. I mean, I just do not believe that Tesla is going bankrupt. Of course, if it keeps going from 100 to 50 to 25 to 10 to 5 to 2 to 1, 0 out, oh, we're bankrupt. Whatever, man. It's not going to happen. I know Tesla, like, it could happen. It could happen. Apple could get nuked tomorrow. I'm not saying that there's no risk. I'm saying that, to me, the lower the price goes on Tesla from here, the more the risk becomes so clear to the upside. So I will be, but yeah, it's a hard dip to buy. Tesla is a hard stock to own, and they really do want to shake out as many of the weak owners as they possibly can. And then that is when the 10x event will happen. And there will be a 10x event for Tesla. Just like NVIDIA, that's going to happen. And so, yeah, that is what I think is going on. That's kind of my general view on the week is, like actually still very bullish. And like small caps didn't really do much. It's kind of just like hanging out. All of the mega caps are hitting all-time highs, all of them, except for Tesla, which is hitting all-time lows. Clearly, they're selling one to buy up the others. And because you have to do that as a hedge fund, you have to be short in some ways. And that's how things balance out. And if you can make the market a little bit using options, why not? Why not? So... anything else happening? Yeah, basically that's what I just hold fast to Tesla. There will be the 10x event, and it will happen the day after all of the shareholders that they hate get their ownership reduced as close to zero as humanly possible. And that is when the 10x event will happen. It will not happen a day before. Now, nobody knows who their targets are, and nobody knows like who the sellers are and who the potential buyers are. Here's something I think about going short on Tesla. The problem with it is like the longer it's at these levels, the more time you're giving other parts of people's portfolio to outperform, and then increase the justification to average into something that's trading at 25% of its all-time highs, like close to. And so, the more time that it stays at these levels, the more attractive that starts to become, the more those conversations actually start to happen. And then, that's how you get really big buyers on board, is the price dips below 150. They've already been talking about it. They've been waiting for a catalyst. Boom, they all want to get it in at once, and they all set their floors to 175 or whatever. And then that's like and all the shorts get squeezed, and that's the 10x event. But that is going to require a break in momentum and a positive catalyst. And both of those are going to happen in the form of the $25,000 vehicle and the self-driving car, both of which are imminent, despite what anyone says. There's no way they're going to cancel that car. They're not going to cancel it. It doesn't make any sense. Why would they cancel it? The only thing that maybe they would only cancel it if AI was so fucking good, so good that they were just going to go straight for pods, something like that. And they were like, we'll use our existing fleet as the robo-taxi network or something. I don't know. It seems like you'd still need a lot more cars. But, and I think people want to drive. I think they actually want to drive because they want to be able to do things that you can't do in a self-driving car, like drive off the road, for example. Might be one example. One too many. So yeah, like the self-driving could be really advanced. That's one thing. But generally, I think that if Elon Musk was to have his moment of glee, it would be that anyone he hates that holds the stock would get and is using margin to increase their ownership would get fucking nuked by a mega stock price, like some bad news rumors that they just let fly, and a bad geopolitical event and a reversal of economic policy, which would yield a downside surprise coupled with some bad economic data, and the market does like 7% in a day, and Tesla does like 15% in a day. And then everyone gets margin called and nuked. And that's why you got to be real careful with buying Tesla on margin, because that is what they want to happen. I'm telling you, it is what they want to happen. So whether or not they can do it, who knows? But it is their goal. And so I think it is starting to get pretty safe though to accumulate 2026 calls. They're still pretty expensive tickets, but anything below 100, it just seems like free money. I don't know. To me, I just think that their earnings are like completely ignoring multiple businesses, the energy business, the home automation business. I mean, I just mean that with like the robots, the Tesla Optimus bot, the car business, obviously. And then who knows what kind of partnerships there could be. I used to think there would be a Tesla phone. It actually makes a lot more sense to have that in SpaceX. But obviously there's synergies and partnerships. They could buy Ford, right? Like they could, there's all sorts of like crazy shit that could happen. But anyway, it's not even, I don't think they would buy Ford, because why would they buy that? Like, what are they bailing them out? What are they, the government? Like, why are they going to write them like a check? Bail yourselves out. Like, learn how to compete in this new way of building cars. Compete as a manufacturer. And it is interesting how Elon Musk emphasizes how we don't really have a lot of like appreciation for the manufacturing process, and he's made me appreciate it because I've taken a close look at it, and it is like basically a miracle. Apple, Tesla, the intricacy and the elaborate beauty, I mean, obviously they put it to like music and stuff, so it's all like dressed up and nice, but still I would love to see it. I would love to see that, and so hopefully I will. But yeah, like that's my thoughts on the market. It's pretty crazy that we're still so bullish, but I think we are, and because I think we had a really bullish close, and that makes me think like how long. Here's my thinking. Then I'll close with this. Yeah. How long can the market really keep going up? If we're in a new paradigm and it's like an AI powered, multi-legged, this is leg one of a 13 leg blow off insane top, and like everyone sells way too early type of deal, that could happen. Like stuff is going to happen in markets that has never happened before. That's kind of what's so exciting about them, is just because there's a trend doesn't mean that is going to continue. Right? Like there could be a massive sell-off on Monday. anything can happen. Anything. It's part of what's so exciting. So, but yeah, I think that if I was to like read the tea leaves, I would say that there is a triple threat happening to shorts and a tailwind to longs, which is that the Fed is going to lower interest rates. That is just going to ease monetary policy. Everything is going to flourish basically when that happens, because everything gets easier. and then at the same time, that is going to coax all of the money that is getting a high yield in fixed income to come back into the markets. They're going to be buying equities, stocks, and that is going to make the price of everything go up. And any shorts who don't cover in time are going to get squeezed. And so, yeah, I think that is what is going to happen. And what I have no idea on is the time frame. I kind of think it's going to be like 2 weeks, and then we'll have like a major correction, is in like, 5 to 10% below where we are now, something like that. But then I'm just wondering what, like, the only thing I could think that could cause that would be if you nuke all of these high flyers and they come down like 10%. Everyone else has been like sold already. Then like, why would they sell? The interest rates are going to come down. Like, first of all, they're going to normalize just because enough time is passing, right? Like, we're looking at these things year over year. The comparisons are going to like lapse, and they're going to look better, and the news flow and data flow for the algorithms is going to be better just based off of time. So like at some point that's going to happen, but also the actual macro environment is bullish as fuck, because AI is real and automation is real. Robotics is real. The global monetary easing cycle is real. Basically, money becoming more accessible to more people in an easier and easier way is going to be good for stock prices, obviously. And a lot of like these different kind of like momentum indicators to the downside have already been broken for a while now. And so I guess my question would only just be I cannot imagine we're going for like SPY 385, 375. No chance. I just don't believe that. I think we are in a new paradigm in that regard, which is, first of all, new money is created all the time, right? Every government in the world just prints it and makes it. And that is getting reflected into the price of our most rare and valuable or otherwise productive assets, like equities and crypto, and mostly Bitcoin, but and obviously real estate and everything else. And so if you're going to be a seller now, not for a week, but for like 3 months, like you're expecting the market to go down for a long period of time, you're kind of an idiot. Like, what the fuck? You're going to short the market for at a 3-month time frame into Fed cuts. Okay, so you're betting that this guy who's staked his entire reputation on doing the things generally that they have to do, so there's always a way to supersede, but still, like, that they're trying to just do what they said or whatever, even if it's not just down to one man, which it totally is and can be, but even if that wasn't the case, like, there is actual weakness in hard parts of the economy. Like, go try it in real people's lives. Credit cards are more expensive. Houses are more difficult to afford. Like, that sentiment adds up. And it's a political election cycle. And so all of the politicians want to point to the green charts at the same time as it actually is hard for real people to be paying high interest rates. And they can't even pay their own debt, which is something that I don't even ever know how we're going to address. I think we're just going to have to, like, let's call it what it is, a funny magic number that we just kind of made up. And now it's like, I don't know. Like, I don't know what we're going to do about the debt. It's fucking crazy. What we should do, actually, what we will do is we'll earn our way out. That is what we'll do. We'll build our way out. And we'll do that through AI and all these different things. And GDP will accelerate, and that's how we'll get out of debt. But we should certainly spend less. So anyway, yeah, that's my thoughts on the macro. I'll do another update maybe next week or whatever as things evolve. But I bet it's pretty bullish because who's going to be a long-term seller? Like, I could see getting on like, okay, let's see if we can get down to 500. Even seems hard. Just look at the macro. The macro could not be more constructive for equities. It could not, even with like all of the FUD people are saying, this is the time to buy, especially Tesla. And if they can get it lower, buy it in a way that you can buy more if it goes lower. But like, certainly if you have no exposure, cover your unlimited upside. Like right now you have unlimited like exposure to the upside or like downside. Anyway, you know what I'm saying. You should own a little bit so that you could profit from the upside of the stock. So yeah, that's my thoughts on markets. It was just like a red week generally, like Coinbase, Robinhood, Bitcoin. All my top ones are down like 5%. So obviously it's a little bit of a bloody week, but maybe some of time in the future, if people are interested, I can share some of the things that I do to protect myself using margin. Both basically, you got to have something to sell. But that can be for another episode. For now, this is as much of the mania as I'm willing to put on the internet for this week.